It's a little bit more fun to answer the what could go right question when so much is seemingly going wrong, because there's room for improvement in all of the areas that just got referenced. You know, this resurgence in inflation, mostly due to the fact that oil has just spiked. Interest rates are starting to creep back up. The Fed is feeling and sounding more nervous and you know, certainly reluctant to cut rates. If anything, discussing the possibility of having to raise rates again. War, of course, is a headline nobody likes to see. However, historically, it hasn't been really a negative for markets. What could go right? I mean, we could have a toning down in the rhetoric of Iran and just the Middle East in general. Everybody feels like that's unlikely. And it may be unlikely, but it's also possible. It's not impossible. And we've also seen so much damage in certain parts of the market. Like you highlighted, software stocks, tech in general, financials, home builders are all really have taken a beating recently. So there is room for improvement. There's room for some of these most recently beaten down areas to regain a little bit of footing. And you know, obviously if the rhetoric tones down in the Middle East, then we're going to probably have a ceiling on oil prices, and that will at least provide some line of sight for oil, for energy stocks, for inflation. All of that sort of trickles into what the Fed's looking at and how likely or possible further rate cuts are. I think at the moment it's a little ambitious to think about cuts, but if there's in a relatively short period of time, if there's not ammunition for the Fed to have to talk about hiking, I think that would be considered a good thing. Those are all things that could go right, which is just a little bit of improvement in all of the areas and all of the things that are going wrong as we sit here today.